This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Stunning setback. The House torpedoes a key trade-related bill, an essential step to granting the president trade negotiating power. But the fight is far from over.
Triple-digit decline. Stocks end the week with a sharp slide, and there are three things that could move the market even more next week.
Drowning in debt. A surprising number of homeowners still owe more on their mortgages than their homes are worth, even as home values rise across the country. All that and more tonight on Nightly Business Report for Friday, June 12th.
Good evening, everyone. I'm Sharon Epperson, in tonight for Sue Herrera.
And good evening from me as well. Thanks for joining us. I'm Tyler Matheson. A triple-digit decline on Wall Street today. More on that in a moment. But we begin tonight with a big defeat for the White House. The key bill related to the president's push to be granted expanded trade negotiating authority has been rejected by the House and his own party. A last-minute trip to Capitol Hill to deliver a personal plea to fellow Democrats wasn't enough. In the end, the vote was an astonishing 302 to 126 on a portion of the package of legislation to help workers who lose their jobs because of imports. That leaves the president's fast-track authority in limbo, which would give the administration the ability to wrap up negotiations on the Trans-Pacific Partnership, a massive free trade deal affecting 40% of the global economy. John Harwood tells us what happened today and what's next.
This was a very big defeat for President Obama and Republican leaders in the House and Senate. They needed this package to go through as a whole in order to advance the president's trade agenda and clear the way from the Trans-Pacific Trade Partnership deal that they hope to negotiate with a dozen nations later this year and conclude and get enacted into law. The rebellion by Democrats sunk the portion of the package that was meant to sweeten the pot for Democrats, that is trade adjustment assistance. Now that that has gone down, TPA itself got a majority. If Republicans are able to bring the trade adjustment assistance back for another vote, they can in fact move forward, but it's going to require another vote or changing that package and getting the Senate to pass it as well, which is more difficult. The more likely thing to happen is that the House is going to try another vote, perhaps next week, and see if they can wrangle enough Republicans to vote for this program that was first initiated by labor unions and get that to be the engine for the free trade deal that they want and that President Obama wants. For Nightly Business Report, I'm John Harwood in Washington.
Well, the White House calls today's trade vote a, quote, procedural snafu and said it's important for Republicans and Democrats to come together on that trade adjustment assistance.
It is clear that the debate over trade is far from over. Hampton Pearson takes a look at who is on either side of this controversial piece of legislation and what they have at stake.
Today was a big win for big labor. Organized union leaders say their focus on the millions of manufacturing jobs lost over the last decade to China and other low-wage economies was a key factor in Congress stalling key legislation tied to the Trans-Pacific Partnership.
This is the beginning of a new look at our economy, that there's a clear choice that was made today between workers and their rights and their needs and their family and community, and a sense of corporate entitlement around the country.
When the votes were counted, the worker subsidy measure was defeated overwhelmingly, a rare vote by the Republican majority against big business.
The ayes are 126, the nays are 302. The motion is not adopted.
The 12-nation Trans-Pacific Partnership would encompass 40% of the global economy and about one-third of all the global trade. The biggest upside for the American economy, a chance to open up Asian markets to American agriculture, the pharmaceutical industry, as well as high-tech and a knowledge-based economy, where U.S. companies have a strong competitive advantage, all part of a bottom-line boost to overall U.S. trade.
We live in a global economy, and we need to recognize that and need to make sure we remain as innovative and entrepreneurial as we can as a nation, but serve a global marketplace and kind of break down some of those barriers, break down those walls, and trade is part of that.
The House did vote to greenlight the authority for the president to negotiate what could be the biggest regional trade deal in American history. In the meantime, both big business and labor are now digging in for a battle that is far from over. For Nightly Business Report, I'm Hampton Pearson in Washington.
On Wall Street, a triple-digit decline on the blue-chip Dow index as concerns over Greece continue to weigh on stocks. By the close of trading today, the Dow Jones Industrial Average fell 140 points to 17,898, back below 18. The Nasdaq dropped 31 and the S&P 500 lost 14 points. Now, despite today's big move, all three of those indexes barely budged for the week, two moving up a little, the Nasdaq lower. Next week could be different. Bob Pisani at the New York Stock Exchange has the three things investors like you need to watch.
Investors escape with little damage this week, but things may get more volatile next week. Here's three events that may move stocks. First and most important, the Federal Reserve concludes its two-day meeting on Wednesday. No one is expecting them to raise rates at this meeting, or really even in July, but most are expecting them to lay the groundwork for a September rate hike. The trick will be to do that without causing a sudden spike in interest rates. Many believe the Fed will likely announce a one-and-done policy where they raise rates once in September, then hold off for the rest of the year. Second, we'll get May housing starts on Tuesday. You know, they hit a 7-year high in April. Will likely be a bit below those levels for May, but anything close to that will enforce the idea that the housing market has recovered from its spring slump. Finally, next Friday is a quadruple witching day. It's the quarterly expiration of stock and index options and stock and index futures. Despite concerns about rate hikes, traders have not yet panicked, and they've sought to buy protection from market volatility. Not yet, but the Fed meeting may make them change their minds. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Our guest tonight says there's something else investors should be watching next week that could drive trading during the entire second quarter. He's Jeff Kleintop, Chief Global Investment Strategist at Charles Schwab. Jeff, thanks for being here. What is the big thing? Does it have to do with pre-announcements?
It does. You know, we're headed in the last couple of weeks of the quarter here, and that usually means pre-announcements. We often call this confession season, as companies confess maybe what might be dragging down the results during the quarter. The good news is, though, it looks like a lot of the big drags on first quarter earnings faded in the second quarter. We're not seeing the same moves in the dollar or oil. We don't have the same weather effects or West Coast port strike. That could mean the results for Q2 might be a little bit better than what maybe Q1 guidance looked like when they last spoke to us.
Are there any particular companies or sectors that we ought to be on a special watch for?
Well, we definitely want to watch some of the multinationals, particularly in the industrial and technology areas, who are exporting a lot, perhaps into Europe, as we look at those economies beginning to recover here in the second quarter, and also the movements in the dollar certainly acting as maybe a negative to some of these companies, but most likely with the economic recovery, maybe actually seeing their sales pick up. So it's a balance between those two factors, something we want to watch closely.
What about looking overseas? Should we be concerned about Greece, as we always seem to be, but is there anything next week to pay close attention to?
You know, Greece is certainly something to watch. It creates volatility. Overseas, another factor might be the MERS outbreak in South Korea and other places in the Asian region. That's been weighing on those indices and certainly weighing on the airline stocks as well as those outbreaks continue. But it looks like they may have this contained now. And if that seems to be the case over the next few weeks, you might see a rebound in some of those indices.
And I know you'll be watching the Fed as well as all investors will next week. Jeff Kleintop with Charles Schwab, thanks for joining us.
Thank you.
Consumers are feeling better about the economy, it appears. According to the University of Michigan's survey, sentiment rebounded in early June and beat expectations. The rise comes despite higher gasoline prices. That jump caused so-called producer prices to record their biggest increase since 2012. The Producer Price Index, which measures the wholesale prices that businesses get for goods and services, increased 0.5% last month.
Another key pillar of the economy, housing. As home prices rise, more and more borrowers are coming up from their being underwater on their mortgages. They're finally regaining the home equity they lost during the crash. But the problem is far from over, and it is one of the reasons there are so few homes available to buy today. Diana Olick reports.
David and Heather Littlejohn just loved building their rural Oregon home back in 2005. But even then, they considered it a starter home. When we talked to them 2 years ago, they were deeply underwater on their mortgage, but hopeful they could dig their way out.
You can shovel right there, too.
Today, with their third Littlejohn knocking at the door, they are still stuck. We caught up with them on Skype.
I did not expect to be here. Our original plan was 3 to 5 years in this home,
And we have since converted Dave's office to our nursery, which we figure, will help us get through the next couple of years, but we're still hoping to move.
Nearly 8 million borrowers are still underwater. That's a little over 15% of homeowners with a mortgage, according to Zillow. A vast improvement over last year, but still about half of those borrowers are deeply underwater, owing at least 20% more on the loans than the current value of their homes. With home price gains expected to moderate, these borrowers could remain underwater for many years to come, and that throws a real wrench into the housing cycle, especially when it comes to starter homes like the Littlejohns.
Those are the very homes that are attractive to first-time home buyers, and because so many homeowners are underwater in that segment of the housing stock, it makes it hard for them to sell their homes to new buyers, which then makes it hard for them to move up and supply the demand for the people in the next rung of the ladder.
So there's some great bargains on upper end properties that we'd like to move into, but you still, since we really haven't developed any equity in our own situation, we're going to have to produce the equity in some other fashion.
While their home has appreciated, they were so far under that coming up could take several more years. In the meantime, the Littlejohns are aggressively saving and considering paying into the mortgage in order to get out of the house. For Nightly Business Report, I'm Diana Olick in Washington.
Still ahead, our market monitor says forget stocks. Investors should own mutual funds instead, and he'll tell us which ones he likes right now.
There may be another showdown in Congress. As we told you yesterday, the Export-Import Bank's charter expires at the end of the month. And that's a big deal to big business. The Export-Import Bank benefits big American companies like Boeing and Caterpillar by extending loan guarantees to foreign customers who are buying American exports. But it also benefits many countries in the Gulf region. Hadley Gamble explains.
They're among the wealthiest countries in the world. And when it comes to doing business, they aren't above hunting for a bargain. With a population set to skyrocket over 40% in the coming decades, the World Economic Forum predicts the Middle East and North Africa will need to invest over $100 billion a year in infrastructure just to keep up. And that's good news, or could be, for some of America's biggest private employers. Companies in Saudi Arabia, the UAE, and Turkey now top the list of regional beneficiaries of the controversial U.S. Export-Import Bank. Data shows U.S. taxpayer money has helped subsidize the purchase of everything from nuclear reactors to commercial aircraft, with the Near East and North Africa accounting for as much as 13% of the total XM trade financing between 2010 and 2014. Now, as the 80-year-old program gets set to expire, critics are amping up the rhetoric, claiming that the multi-billion-dollar profits for U.S. companies like Boeing and GE don't necessarily mean bigger benefits for employees or taxpayers. But with billions of dollars in regional mega projects up for grabs, supporters say it would be a shame for U.S. companies to miss out on the action. For Nightly Business Report in London, I'm Hadley Gamble.
Wall Street had a big appetite for the chicken wing chain Wingstop, and that is where we begin tonight's market focus. I'm hungry. The Dallas-based restaurant chain surged in its trading debut, valuing the company at nearly $1 billion. Shares were priced at $19 apiece on all the wings you can eat. The stock closed at $30.59. That was an increase of 61% on the day. FedEx will book a pre-tax charge of more than $2 billion. This is a result of the shipping company's decision to switch to a pension accounting method that it says will make it easier to gauge plan performance. Shares at FedEx off a fraction today to $183.63.
And Tyler, there's more on Twitter's CEO shakeup. Incoming CEO and co-founder Jack Dorsey spoke today about the abrupt departure of Dick Costolo.
We've always had an open conversation with Dick and the leadership and the board about the next steps of the company, and we do that just in service of making sure that we're putting the company first. And we did not want to interrupt that momentum. If anything, we want to amplify it because we're extremely excited about the products and new initiatives to come.
And even on those comments, shares were just a few cents higher at $35.90. Bob Evans is considering either converting to a real estate investment trust, or otherwise known as REIT, or selling and then leasing back its restaurant properties. The restaurant chain and food distributor will make a decision within the next few months. Shares were up almost 3% on the news to $47.41.
Big week, Sharon, for shares of Eli Lilly. The stock gained more than 7% despite today's pullback. Big move in a short period of time for a big pharmaceutical company. There you see it. And many say it has to do with Lilly's experimental Alzheimer's drug. Meg Terrell has more.
Alzheimer's disease has been a particularly challenging area for the pharmaceutical industry, with many drugs failing in the late stages of clinical trials. There are no medicines on the market that target the underlying cause of the disease, which affects more than 5 million Americans. So excitement has been mounting around experimental drugs that have shown some promise in studies. Eli Lilly's solanezumab is one of them, and it's already experienced some failure itself.
It had what I would say is kind of a checkered past. It had 2 phase 3 studies, both of which failed to hit their primary endpoints.
Despite the setback in 2012, Lilly said it identified a group of patients for whom the drug appeared to be working.
They'd be considered a little bit more mild to moderate Alzheimer's patients. These patients appear to be responding a little bit better than patients who have had the disease for a long period of time.
The Indianapolis-based drug maker is now focusing on that patient group in clinical trials. Its key study is expected to report results late next year, but it could provide some updates on how it's doing ahead of an Alzheimer's conference in July. The excitement around Lilly's drug follows a run-up earlier this year for competitor Biogen, which showed some promising data on a similar medicine. They both target the amyloid plaques in the brain associated with Alzheimer's disease, unlike currently approved medicines that target only the symptoms, with limited effect. That enthusiasm for new Alzheimer's drugs helped drive newly public biotech company Axovant's shares to almost double yesterday in their first day of trading. The company now has a market value of almost $3 billion. Morningstar analyst Damian Conover estimates Lilly's drug, if successful, could draw more than $2 billion in annual revenue, likely priced at more than $10,000 a year. But it'll have to get through the last stages of testing first and may not hit the market until late 2017. He warns the movement in Lilly's stock price may reflect too much optimism that risky pipeline products like solanezumab and another medicine for cholesterol called evacetrapib will work.
Both solanezumab and evacetrapib are a little bit more on the risky side, swing for the fences products. And a lot of times when you swing for the fences, you strike out.
With Alzheimer's cases expected to triple by 2050 without new treatments, patients, families, and investors are all hoping for a hit. For Nightly Business Report, I'm Meg Terrell.
11% of American children ages 4 to 17 have attention deficit disorder, according to the Centers for Disease Control. Billions of dollars are spent each year on drugs to treat the disorder. But one startup says it can help people in a way that replaces the need for medication. Dina Gazowski has our story.
Go ahead and try to put it on your head. This should go behind your ears.
Am I the red guy or the purple guy?
You're the purple guy.
This is not your typical mobile gaming device. Because MindLift, created by an Arab-Israeli entrepreneur, is meant to help people with attention deficit hyperactivity disorder, known as ADHD. Exercises like this could help improve concentration levels.
So the point of this is the more you concentrate it, the higher it will jump. So we have a video exercise in which you will see a movie that is controlled by your concentration levels.
The more you concentrate, the brighter the screen becomes. Same with volume here.
So this shows the progress of the user.
What inspired you to do this?
Both my sister and my brother have been diagnosed with ADHD, and they started taking ADHD medications, which had me witnessing the most annoying side effects, starting from headaches to lack of sleep, loss of appetite.
Even with the potential side effects associated with ADHD medications, it's a multi-billion-dollar market for drug makers.
Neurofeedback is an amazing technique that can deal with ADHD.
Neurofeedback, that's what tracks brain waves, which are then sent to this software to monitor concentration levels. But there are skeptics about just how far the company could actually go.
It sounds like a very exciting technology, but there's not a lot of information available. No parent wants to give their child a medication. However, there are limitations to behavioral modification at present.
Still, this entrepreneur hopes his device will train people to focus without taking medicine.
We gathered a team of designers, software engineers, and people that come from the medical field in order to create this.
For Nightly Business Report, I'm Dina Gosofsky in New York.
Tonight's Market Monitor guest says, buy the manager, not the fund. In fact, he trademarked that statement. Last time he was on with us, his picks were Apple. It's up 19% since then. UPS down 3% and Visa up 17%. Let's hope he does as well this week. He's Jim Lowell, Chief Investment Officer at Advisor Investments. Let's start with a quick thought on what you see for the markets over the next 6 months.
I think we're going to see a lot of near-term volatility, Greece or otherwise. We know that this is a market that's prone to whatever our Fed may or may not do and all the rumors that attend to it. So I think investors are going to have to get used to a lot more volatility, if not just market volatility, emotional volatility as well. But into that mix, gains typically are made, especially if you're a good long-term investor or invest in good long-term investors.
Are there certain mutual funds that you could invest in that will help to alleviate some of that volatility? What are some of your favorites right now?
So I'd say my hat trick of picks for hopefully a trinity of gains would be Fidelity Mega Cap Stock, Fidelity International Growth, and Fidelity Japan Smaller Companies. I don't only invest in Fidelity funds, but I like those three in particular. The managers behind each of them have stellar track records, not just in up markets, but also defending well against downdrafts. Losing less will enable each one of those managers, I think, to be able to climb out of a shallower hole versus an index fund or an ETF. In particular, I like the U.S. mega cap space because it is still relatively undervalued, especially compared to our mid and small cap areas here at home, in large measure due to the fact that their revenues derive from the international markets, which have been weaker than our own. And across the pond, Europe is just a perfect trouble spot. There's a tempest in almost every teapot there, but that's great news for a manager like Jed Weiss at International Growth, who's got a long-term track record of going in, turning over the stones, finding the rubies in the rubble. And then Japan Smaller Companies basically helps me sidestep the Nikkei 225, Japan's equivalent to our S&P 500, which sets successive 15-year highs almost every week. I think that's overvalued. But in the mid and small cap camp, they're not vulnerable to currency and exports. And if you know what you're doing, there are over 1,000 companies in the Japan marketplace with PEs under 13. There are less than 200 in our own Russell 2000.
Jim, I've known you and known your work for a long time. I just want to be absolutely clear with the viewers. You specialize, or at least these picks are Fidelity picks. You have a newsletter that is independent of Fidelity called what, Fidelity Advisor or something like that.
It's called Fidelity Investor. Yeah, it's called Fidelity Investor. And it's been out and about for over 15 years, top ranked by Mark Colberts. And it's also completely independent from Advisor Investments. But that is one of my expertises. I also have been writing about exchange-traded funds since 1996, a long time before anybody even thought they were the best mousetrap in town.
Yeah. All right, Jim, thank you very much. We appreciate it and appreciate your time this week. Have a great weekend.
Thank you, too.
Coming up, despite generating billions in revenue, one industry is having a hard time finding a bank to do business with. That story next. There may have been a second government data breach. The Associated Press is reporting that hackers linked to China appear to have gained access to sensitive background information submitted by intelligence and military personnel seeking security clearances.
Well, entrepreneurs are launching legal marijuana businesses at record rates in many states, but like any growing industry, the pot business is seeing its share of growing pains. And one of the biggest hurdles is finding a bank to do business with. Kate Rogers talks to one entrepreneur who's trying to overcome that challenge.
Despite continued progress in the fight to legalize marijuana for both medicinal and recreational use, the drug is still illegal on a federal level. This means entrepreneurs looking to cash in on the budding business model struggle to establish relationships with the banking community. It's a battle Andrew D'Angelo knows all too well.
If you've gone through 5, 10, 15, 20 banks, we're on our 15th bank or so right now. Once you go through that experience that many times, you sort of learn how to improve the way in which you establish these relationships with banks.
D'Angelo and his brother run Harborside Health Center, a medicinal marijuana dispensary collective in Oakland, California. They've been in business for nearly a decade. In that time, they've managed to form 2 relationships with banks, one a credit union and the other a regional. But he knows at any minute those partnerships may disappear.
Instead of going through the trouble of establishing a legitimate paper trail for their clients in the cannabis sector, they'll just not do business with anybody in the sector because it's just easier for them.
The team here at Harborside deals with a lot of cannabis and a lot of cash. In fact, I'm holding nearly 3 pounds of marijuana here, which is worth about $9,000. But one of the things that makes Harborside a standout in this community is that they've employed a ton of best practices, which have allowed them to establish a working relationship with the banking community. Things as simple as properly counting cash go a long way in establishing trust with banks.
It's really about watching and counting over and over again and making sure that people, when there are shortages, if there are shortages, we do a thorough investigation.
Harborside also has an extensive security system with vaults upon vaults to keep products and cash safe. They have more than 40 security camera angles and biometric finger scanners on doors behind the scenes. But even with these measures, D'Angelo knows his banking relationships are fragile.
Amazing cannabis.
Subject to change with cultural and political shifts. For Nightly Business Report in Oakland, California, I'm Kate Rogers.
And that's Nightly Business Report for tonight. I'm Sharon Epperson. Thanks so much for watching.
And I'm Tyler Mathisen. Thanks from me as well. Have a great weekend, everybody, and we'll hope to see you right back here on Monday.